I'm Charlotte McLeod with the Investing News Network, and here today with me is Simon Popple of the Brookville Capital Intelligence Report. Thank you so much for being here online with me today.
Great to be here.
Yeah, great to have you back. And today we're going to be talking about a very hot topic right now, which is uranium. I always like to start by looking at the supply and demand picture there. And we're going to start with demand. I think nuclear energy is an avenue that some countries are pursuing as they move toward a greener future. But uranium does still have a negative reputation left over from the Fukushima disaster back 10 years ago. So I want to start by talking about attitudes toward nuclear energy and how you see that. Do you think it's changing, and what is it looking like to you today?
Well, yeah, first of all, it's definitely changing. Macron in France recently came out and said they're planning to build quite a few smaller nuclear reactors. I think that there's been talk in Japan about opening up their nuclear reactors, and I think people need to be aware that technology has moved on dramatically since Chernobyl and Fukushima, and the type of nuclear reactors are very different. And just anecdotally, I was talking to my next door neighbor, who's probably the greenest person I've ever met, and I asked him what he thought the greenest form of energy was, and he said nuclear, which I found was absolutely astounding because obviously if you've ever watched a program on Chernobyl or Fukushima, you probably wouldn't say uranium and nuclear. But it is, the world has got huge demand for electricity, especially if the electric vehicle market takes off. And so I think that, the demand for electricity and clean electricity, so nuclear power, so uranium, is looking pretty robust over the sort of foreseeable future.
Yeah, I think that's so correct that even on the individual level, those attitudes are changing. And against that backdrop, we have an interesting supply situation. In recent years, we've seen major producers cut production. And as prices are now starting to rise, I think supply is a key question. People are wondering when there might be a response. So what are you seeing on the uranium supply side at the moment?
Well, it's interesting because you've got Cameco, which are one of the world's largest, if not the largest, producer of uranium, certainly in the Western world, and they've got MacArthur River on care and maintenance. Now, the cost of these is huge, and to bring them back on stream, this cost is so high. You really want to have some major offtake agreements in place. And so I think that supply it's definitely out there, but I think you need to remember you can't print uranium, and so I think at some point, yes, there could be more supply coming onto the market, but I think quite a lot of that supply will come onto the market with a decent proportion of it in an offtake agreement. And so will it impact demand? Will it impact price? It probably will, but I don't think it's going to impact it to the point that other people want to put their own projects on care and maintenance unless they're particularly high cost.
Yeah, and speaking about accessibility of supply, I think it's so right. You can't take an operation that's on care and maintenance and bring it back online right away. And kind of similarly, in recent years, explorers and developers have also been slowed down by the low price environment. So do you think we'll start to see some changes among those explorers and developers now that we're in this environment that's a little bit better for the price?
I think a lot depends on the projected price of the uranium they're going to extract and the quality of uranium they're going to extract. If you've got a low cost operation, or it's forecast to be a low cost operation because it's not in production, then I think that there's going to be more interest from capital providers to provide capital to get it into production. The spot price will have to be significantly above their cost of production, but there are a few players out there that are certainly in that position. I think if you're a higher cost producer or higher cost explorer developer, then capital providers are going to wait longer to feel more reassured about the price, and therefore that's not to say they won't come on stream, but I think they'll want to see a high uranium price for a longer period of time before writing the big checks to get these plants up and running.
Right, and I think this leads into my next question pretty well, which is about where investors should consider putting their money right now if they want to take advantage of higher uranium prices. Should they be looking at producers? Should they be looking at developers or explorers? How do you see it, and how would you go about choosing stocks in this market?
I think that given the long lead time it takes to get a project into production, I think it probably makes sense to have a look at all of those. I know it's a bit of a cop out, but you don't want to have all your eggs in one basket. And so I think having perhaps a bit of something like the Sprott fund, where you've actually got physical uranium, and then having a bit of a producer, having a bit of a developer, having a bit of an explorer, just having pockets of money in each basket is probably no bad thing, because if the market takes off, the price can move very quickly. And if you do find yourself in profit, one of the golden rules is don't be too greedy and take your money off the table. But if the market does take off, you should be in a position where you can get what's known as a free ride, where you take in your initial investment off the table and you still got a meaningful chunk of capital invested in the sector. And I think if that happens, investors could be in for quite an exciting time.
Yeah, and we've spoken in the past about the criteria that you look at when you're evaluating stocks in the resource space. So maybe you could go quickly through that again and how that might apply to some of the uranium companies that we see out there.
Yeah, sure. I mean, I've got my own system, which I started off using for gold, silver, and precious metal companies, but it also very much applies to any mining company. I call it the bridge system. With B is for balance sheet, R is resource, I is infrastructure, D is diversification, G is grade, and E is exploration potential. So just going through them very quickly. B, the balance sheet, building these processing plants isn't cheap. And so you want to have a balance sheet that is suitable for what your aspirations are. Now, if you're a producer, then having some debt is fine, because you've got cash flow. But you want to look at the cost of production and how safe that debt is. If you're an explorer, I don't like to have any debt, because you've got no cash flow. Resources, again, given the costs of getting these processing plants up and running and the time, you want to have a decent resource that can give you a nice mine life. Infrastructure, you need to have roads, power, water in the vicinity of where your deposits are. So you've got a cost-effective way of transporting and extracting the uranium. D is diversification, which is the point I was mentioning earlier. I think you want to have quite a few different companies. Don't put all your money into one basket. G is grade. Basically, the higher the grade, it's a big generalization, but generally, the higher the grade, the lower the cost. And so you do need to look at the grade and look at the quality of the uranium, and really kind of do a bit of research and read around who else has got that quality of uranium in the market, because it may be that it's suitable for a local processing plant that's got some spare capacity. If they don't have spare capacity, then you may have to have your own plant. Question, how expensive is it to process that grade? And E is exploration potential. I think it's on the one hand, obviously you want a good resource with a decent mine life, but if you've got more exploration potential, let's say 50% of your tenement hasn't been explored and you've already got a 20-year mine life, that's pretty good. But if you've got let's say a 5-year mine life and you've explored 90% of your tenements, then that's not so good. So it's very relevant to look at what the potential is for further finds in your area.
Okay. Now, definitely every investor is different. And as you mentioned, diversification is important in a portfolio. But looking at the uranium companies in general, is there any particular level or size of company that you would see the most opportunity in right now, the juniors, developers, or producers?
Clearly, the smaller ones are much higher risk, but you can get some stunning returns from them. But I personally, I like to have, I use a fantasy football format, which basically forwards, midfielders, defenders, goalkeepers, and the stadium. So I would have someone like a Cameco would be a sort of a goalkeeper for me, and then an explorer would be a forward. And there's quite a lot of companies in the sort of the middle area. I think you want to have a bit of everything, because Cameco, if the uranium price goes up, you would hope would do well. An explorer, obviously, if the uranium price goes up, that's a big tick in the box. But if they find a huge deposit and the uranium price is going up, and you've got a company that's valued at 20, 30, 40, 50 million, your shares could go up dramatically. But you don't want to have all Camecos, or you don't want to have all explorers. You need a bit of everything.
For sure. And you also see a place for things like ETFs or the Sprott Uranium Trust, which has definitely become kind of a phenomenon in the space right now.
Yeah, I personally, I'm a bit wary of ETFs because there's quite a lot of links in the chain. But something like the Sprott Trust, if you want to have exposure to physical uranium, then that's what you're getting. So providing you've got a diversified exposure to the sector, if that's part of your plan of attack, then I wouldn't want to put you off it.
For sure. And it really feels right now in uranium that we're at a pretty interesting moment. What do you think the most important drivers for the price are?
I think it's largely government. I think that the more that governments embrace nuclear power, green energy, electric vehicles, I think the more the demand is going to be for uranium, because I think that society is going to, especially if we have electric vehicles, the demand for electricity is going to be very high, and that electricity has to come from somewhere. Now, at the moment, a lot of it comes from fossil fuels, so it doesn't really make a huge amount of sense to get electricity from a coal-burning power station, and then say you're really green because you've got an electric car. I think that governments are going to be looking for more joined up thinking and be thinking, right, we want the whole chain to be green. And if that's what they do, then I think you'll find that there's a lot of power coming from nuclear, and then obviously if the electric vehicle market takes off, there'll be a huge demand for electricity. Having said that, I think there's still likely to be a lot of demand for fossil fuels. You've seen the oil price go ballistic at the moment, but I think over the short to medium term, then I think governments will want to keep the lights on, and because a lot of these nuclear power stations haven't been built, they could take a long time to come on stream. So I think in the sort of intervening period, I think that some companies that aren't involved in nuclear power could also do very well.
Okay, so the future is definitely looking bright for uranium, but it's a market that has kind of been down in the dumps for the last decade or so, and it's had false starts. So I like to ask people, do you feel sure that this time is different, and why do you think that?
I think that the green movement globally has become far more powerful and important than it used to be. And I think that is going to be a key driver for how energy is produced. I think that over the short term, society will be reasonably understanding about getting power from, let's say, non-green sources. But I think over the medium to long term, there will be an insistence, even if it's not massively cost effective, to ensure that more power is from cleaner sources such as nuclear. So I think the future is pretty good, to be honest.
Are there any final things you would add about uranium that you think investors should know as we're wrapping up here?
All I'd say is it's a very volatile market. So if you're someone who doesn't like volatility, I probably wouldn't touch it, to be honest. But yeah, the returns can be just unbelievable. You know, they can be absolutely stunning. But you know, and I don't think it's too late either if people want to get into it. But I think if you do want to do it, then it probably makes more sense to do something sooner rather than later.
Okay, yeah, and that volatility element is so true for so many of the commodities that we cover. That is all from me. Thank you so much for being here to give us an idea of what's going on in the uranium market.
Thanks, really enjoyed it. Thank you very much.
And once again, I'm Charlotte McLeod with the Investing News Network, and this is Simon Popple.